Ever wondered how Wall Street wizards seem to always have the upper hand in investing? Well, there's an enchanting book that aims to demystify the art of investing. It's called One Up on Wall Street, penned by none other than Peter Lynch, a renowned investor with an illustrious career. Peter Lynch isn't just another Wall Street guru. He's a financial maestro who conducted his investment orchestra to the tune of astounding success. And in this book, he's generously sharing his symphony of secrets with us all. One Up on Wall Street isn't your typical investing guide. Lynch firmly believes that ordinary individuals like you and me can outperform the Wall Street professionals. How, you ask? By investing in what we know. He encourages us to leverage our everyday knowledge and experiences to make informed investment decisions. Intrigued? Let's delve into the chapters and uncover Lynch's wisdom. It's time to learn the art of investing from a true maestro. Ever bought something without knowing what it is? That's like jumping into a pool without knowing how to swim. Peter Lynch, in the first chapter of One Up on Wall Street, urges you to avoid doing just that when investing in businesses. He emphasizes that understanding the business is paramount before you decide to put your money into it. It's like buying a book. You wouldn't spend your hard-earned money on a book without knowing its genre, would you? Similarly, Lynch advises you to invest in companies that operate in industries you're familiar with. It's about knowing the ins and outs, the plot twists and character developments of the business world. If you're a book lover, think of investing as diving into a new novel. You're more likely to enjoy it and understand it if it's a genre you're comfortable with. So, invest in what you know and understand. Remember, knowledge is power, especially when it comes to investing. Do you like taking risks? In the world of investing, Peter Lynch refers to these risks as long shots. These are the high-risk investments that could potentially offer high rewards. Lynch, in Chapter 2 of One Up on Wall Street, warns about the seductive allure of these long shots. They're like the siren song, tempting but dangerous. Now don't get me wrong, Lynch isn't against taking risks, in fact he's all for it. But he emphasizes the importance of taking calculated risks. According to him, you should only dive into these long shots if you have a strong conviction about the company. You've studied it, you understand its business model, you believe in its potential. Remember, investing isn't about throwing your money at every opportunity that comes your way. It's about making smart, informed decisions. It's about understanding the risk and reward. It's about knowing when to take a long shot and when to pass. Investing isn't about gambling, it's about making informed decisions. Ever dreamt of finding the perfect stock? A tantalizing thought, isn't it? But according to Peter Lynch in his book One Up on Wall Street, this might be a fallacy. Lynch urges us to shift our focus from the elusive pursuit of the perfect stock to something more tangible and pragmatic: the company's fundamentals. Imagine a company as a book. Its cover might be glossy, its blurb enticing, but it's the core content that truly matters. Similarly, a company's stock price or market reputation can be deceiving. What truly counts are the company's earnings, its debt, its competitive position, and its ability to navigate the future. So rather than getting swept up in the frenzy of finding a stock without blemishes, Lynch advises us to roll up our sleeves and dig into the company's financial statements. Understand its story, its strengths, and its potential weaknesses. Perfection might be a myth, but a well-researched investment isn't. So, what can we learn from one of Wall Street's greatest investors? One of the key takeaways from Peter Lynch's One Up on Wall Street is the importance of deeply understanding the business you're investing in. It's not just about the numbers, but knowing the ins and outs of the company, its products, and its market. Lynch also warns about the allure of the long shots. Unless you're absolutely certain, it's best to avoid these risky ventures. Instead, focus on the fundamentals, the steady, reliable aspects of a business that consistently generate revenue. But perhaps the most empowering message from Lynch is his belief in individual investors. He firmly believes that with the right approach, patience, diligence, and a keen eye for detail, anyone can outperform Wall Street. In the words of Lynch himself, invest in what you know, and you might just end up one up on Wall Street.